Asian markets opened in the red this morning while oil flirted with 5-month highs, as investors worldwide wait to see how Tehran will answer the weekend's US strikes on 3 Iranian nuclear sites. Seoul's Kospi dropped almost 1%, Tokyo's Nikkei shed a similar amount, and Hong Kong's Hang Seng slipped just under 1%. Shanghai edged lower too, all reflecting jitters that fresh Middle East turmoil could tighten supply chains and lift energy costs. Brent futures jumped roughly 3% in early trade before cooling, yet remain well above last week's levels. For Pakistan, which imports most of its crude, every extra dollar means a heavier fuel subsidy bill, and fresh pressure on the rupee. Economist Tim Harcourt notes Iran supplies only about 3% of world oil and that OPEC can raise output if required.
Well, Iran's 3% of the global oil supply, so that's a concern. But OPEC has said they will release supply. So I think short term, it'll be okay in respect to oil. The big thing is if there's some sort of blockade for the Straits of Hormuz, that could interrupt shipping.
The bigger worry is geography. The Strait of Hormuz, at its narrowest, just 33 kilometers wide, the channel carries a quarter of global oil and a fifth of liquefied natural gas. Shipments our Karachi refineries rely on daily. Tehran has again threatened to block the waterway, and merchant vessels have been attacked there over the past 18 months. Shipping firms usually find workarounds, but even brief disruption can spike freight rates and pump prices. Islamabad's planners are therefore watching both Vienna's OPEC headquarters and Tehran's parliament for clues on supply and escalation. For now, traders and policymakers alike remain on alert. We'll keep tracking the markets, the Strait, and what any Iranian response could mean for fuel costs from Lahore to London.